It's a great pleasure to have Michael Van De Poppe. Michael, it's a really hard question to answer, but maybe you can start off and just tell us why you think Bitcoin has sold off as badly as it has. We got close to the $80,000 mark this morning, and I've seen a number of different reasons why this has happened. A lot of news coming out of Japan in the last 24 hours. And very interestingly, some news in the US that a lot of people are now focusing on the MSCI index and what that might mean for cryptocurrency, digital asset treasuries in the US in January. Michael Saylor just put out a tweet. So there's a lot to digest, but let's start it with you and what you really think has caused this big sell-off in the last 48 hours.
Well, it's a very hard question. I think you see a lot of headlines coming around with people trying to predict what has been happening. Is there any causality between the events or not? Or is there like supposedly a reason of one or the other? I think there's a combination of factors. First of all, we had the government shutdown that has created low liquidity in the markets. We had the big sweep on the first Black Friday, which was October the 10th. It's relatively clear that a few big players have exploded during that period. And the unwinding of that event takes time. I was at an event on Wednesday Eve in London, and the rumors are that just a big market maker has collapsed, but it's not clear which one yet. And it kind of shows the way the markets have been going down over the past 48 hours. It feels a bit unnatural in terms of how the markets are dropping down. Earlier this morning, we had a big wick with a high volume liquidation coming in as well at 81K. On the other hand, altcoins are not suffering that much. Ether versus Bitcoin has done nothing over the past 10 to 15 days. That's unusual for a bear market too. And on top of that, we can't deny Japan. Japan has been, hitting the markets back in August 24. It has been hitting us earlier this year. And every time when something is happening there, it has an impact on the rest of the market. So yes, it's a combination of macro and crypto. And the only concern that there is that even on days that the Nasdaq hasn't been doing much, Bitcoin has been continuing to fall. So you can basically see that something is off in the crypto markets.
Yeah, one thing I'd like to get into is, I guess, the composition of the sell-off and who's behind it. I saw a Glassnode put out a tweet earlier before we come online that said, BTC realized losses have surged to levels last seen during the FTX collapse, with short-term holders driving the bulk of capitulation. The scale and speed of their losses reflects a meaningful washout of marginal demand as recent buyers unwind into the drawdown. I think it's interesting. We've seen the narrative over the past maybe year to 18 months of the OGs, the long-term holders, being the ones that are selling. I called this up with Ran, actually, when we had him on the show, the long-term holders being 155 days or longer. I think that's such a short amount of time realistically that it kind of blurs what that metric really demonstrates. But still, we have seen a lot of OGs selling. This is something different. This isn't sort of tactically selling into what was meant to be a bull market. This is panic. What do you think is driving that panic primarily? And in your experience, what stems that bleeding?
Well, I mean, it's kind of like, if take the Japan news. It's quite clear that the Japanese yen carry trade has had an impact on the markets, and the unwinding of that has its toll within risk-on assets. It has been risk-off, but in the last 24 hours to 48 hours, it's not clear whether the news of Japan is actually impacting the markets or whether people reading the news are panicking and therefore selling their positions. And then we are also at a pivotal point at this point with the fact that we are at the end of the 4-year cycle, which is in comparison with what you said on the short-term holders or the short-term buyers and OGs selling. A lot of people are thinking that the current market is basically at the end of its cycle, causing the additional sell pressure. And that is just a snowball at this point until we hit a level of so much panic that people are actually thinking, this is actually a good level to buy. Then it's going to take a lot of time before we're going to go back up. So it's just a combination of events. It's mass panic. You mentioned it before. It's the highest number of short-term P&L in loss. It's also the lowest fear and greed index. It's the lowest daily MACD we've ever seen on Bitcoin versus USD. The RSI levels are on the same level as in 2022 during the Luna crash. I'm usually looking at the gap between the current price and the 20-week MA or the daily MA. It's as big as during the Luna crash. So it's far overextended to the downside. And I think the reason that we're so far down is just there's so less supply on the markets being traded at this point that supply, if that is going to be moved by a big player selling assets, it's going to increase the liquidations and the leverage trades on the markets both ways. So we've seen it to the downside, and right now there are not too many long positions opened or left anymore. If Bitcoin taps one of those highs the other way around, it's going to create a short squeeze where you could expect Bitcoin to be back up to 90K within a few hours. So it's just it's a combination of like a tornado, I would say.
Well, yes. I mean, it certainly feels that way. I think it always surprises me with the markets that there's this sort of self-fulfilling prophecy, particularly with the cycle. And you touched on it there, that people are expecting the end of the bull cycle. And so they're kind of selling almost as a reflex. And I saw Samson Mao tweeted this morning something that I think we've all thought when we've seen this, which is we haven't had a proper bull market, or at least that resembles the past bull markets, I should say. So how can we be in a proper bear market? My reaction to that was, is this just indicative that the 4-year cycle is not going to play out like it did before, and that perhaps everything's just compressed a bit and we will see smaller, less parabolic bull markets and then less painful bear markets? What do you make of that? Do you think that's indicative of anything?
Well, currently we are in a phase where the people that are saying the 4-year cycle doesn't exist and the ones that say that does exist are both right. That's kind of like the period right now. And today, the 4-year cycle believers are very out there on social media. Congrats to them. But if we look at the data, this cycle has been completely different with the all-time high pre-halving, with the ETF and the inflow. We needed 60 billion to go from 40K to 125K in terms of inflow. The market is expanding, which means that there's more money required to go into that peak bull mania hype, and that takes longer. And for me, this correction is a little bit more than what we get in a standard correction, but that is due to the increased level of panic. I don't believe that this is the start of a bear market. I might be wrong. Do whatever you want. But if we look at the macroeconomic factors like PMI and all the business cycle things, we need to take into account that hasn't gone off yet. I had a podcast with Root the other day. Before 2008, there were 80-year cycles in terms of business. So 2000, early 90s, early 80s, and all finalized with a big crash or correction or whatever. Since 2008, it was 4 years, and now we can see that we are in an expanding cycle. So what I make out of that is that the halving and the impact of the inflation of Bitcoin and the selling of miners against the buy pressure of the ETF is now getting more in hand of the ETF flow. And therefore, the ETF itself and everyone trading as an institution has a bigger impact than miners. So if there is an unwinding of the Japanese yen carry trade, if a lot of hedge funds are negative for the year, they will sell their risk on asset and go into other ones to balance it out at the end of the year. I believe that at this point in time, this correction is going to end. It's going to take a lot of time before we go back up, but that 2026 is going to be better than a lot of people expect, and that we're not having the standard bear market 80% correction at this point.
You mentioned ETFs, and I think this is something we should touch on. So yesterday, I'm just looking at the stats. Bitcoin ETFs saw 900, these are the US spot Bitcoin ETFs to be clear, saw $900 million worth of outflows. I think IBIT saw 200 and something, nearly $300 million worth. $262 million out of the Ethereum ETFs. However, Solana ETFs saw inflows. Now, they are still young ETFs, but they haven't actually seen a day of outflows yet. Let's start there. Why do you think that is? Is that perhaps a sign of anything or just incidental?
Well, I'm not really the go-to guy when it comes to the Solana ecosystem, I would say. But it's quite remarkable that we've just witnessed Bitcoin go from 110K to 80K in less than 10 days, and Ethereum versus Bitcoin is the same. In a normal actual bear market move, today altcoins would have been down double digits. So that's unusual and different. And it's all up to how fast Bitcoin can bounce, how swift it can be, how high we can find a floor, and go from there. In the end, it could be that we are in the middle of the COVID crash and then find a floor, take a few months, and we go back up again because macro is changing. On the other hand, we could also be at the end of the entire macro cycle at this point and actually have a longer bear market. That's why you see the conflicting theories. But the good part is that Ethereum versus Bitcoin and a lot of altcoins are not falling more than Bitcoin. I think that's the core headline at this point.
Michael, I'm sure a lot of people in the audience are wanting to see your charts and see how you're reading things. Do you want to bring up a Bitcoin chart or maybe an Ethereum chart and just give us a sort of short-term, long-term outlook of how you're reading things at the moment?
Sure, yeah. I'll just get it up here and clean it a little bit. All right. So if we look at the monthly chart for Bitcoin, it is not good. It's not great. This is the heaviest monthly candle until date that we've seen since the Luna crash, and the same as the summer Elon Musk China crash or whatever it was. We are not in good territories, but if we look at this trend, and even if we consolidate here, we can technically still say that we are in an uptrend. So that is slightly good. If we look at the weekly, I mentioned before, I'm using the narrative or the indicator that's the 20-week MA. So with the fund that we trade, we use this on lower time frames to basically do the volatility trading. And as you can see on both the weekly and upcoming the daily, the gap between the current moving average, the 20 MA, and the current price has not been as big right now in the entire cycle until date. The last time we've had such a big gap was during the Luna crash, and then probably somewhere in 2018, which then says that we're getting into very important levels at this point. And if we start zooming in a little bit more before I dive into my entire thesis of what to expect, daily RSI is hitting levels we've not seen since August 24. That was the Japan crash. We start to see a lot of volume coming in. And again, here there's also a big gap between the two, which means that the fair value of Bitcoin is around the 20 daily MA, which is still approximately 10 to 15K from here. So the further it dips, the more likely it will find itself into a bottom, and at least we get a bounce back towards that moving average, as we've also seen during the earlier phase of this year, which is February 2025. So what is then most likely to happen here, which is, I think we need to find a base of support. We need to form a base of support. Clearly, we have broken structure. So the 100K level was the actual final support. We rejected and then basically nosedived all the way. So at this point, everybody wants to short the markets. It's getting undervalued on the higher time frames and the lower time frames, which means that it's very likely to at least have a bounce to anywhere between 95 to 100K. That's going to be marked as Benjamin, his 200-day moving average bounce, or anyone that is bearish to sell their positions, get out, and then we get a formation like we've seen here before we break the 100K level or before we break the 75K level. And that decision is all a matter of macroeconomics adjustments, whether or not it's going to happen. But it's going to take time. If we then look at the markets in itself, like the others versus Bitcoin chart, quite normally, if the markets are bearish, you would rather expect this one to break down. And that already happened. As a matter of fact, we are up on a week for the others versus Bitcoin chart, and ETH versus Bitcoin is similar to it. So I'm just putting it on a monthly, which I use this as a reference where the higher time frame valuations of the altcoins versus Bitcoin is not going down. It's actually going up. And that's quite unusual if you believe that this is the bear market crash. This is actually, for me, a reason to say it's a bull market correction. And then if Bitcoin finds itself into a support level, goes sideways or whatnot, then you would assume that altcoins are going to bounce back stronger. That would be another signal for me to say, hey, this might not be a bear market crash at all. And if we compare the periods of time between the cycles, in my opinion, this stage, if we add the MACD and also the business cycle, is comparable to Q4 2019, Q1 2020, and also comparable to the beginning of 2016. So that's where we are at with the cycle. And the end of a correction or the end of a period is always shown by a capitulation. Today might be the day, but it doesn't mean that we actually have hit the bottom. We can test the low multiple times before we find enough buy pressure to go back up.
I'm sure a lot of people are asking then what your prediction is of a bottom, like a local bottom or a bottom for Bitcoin. I saw, Scott Melker was posting some of his charts and some of his predictions, and I think he said if it moved way below the 50 day moving average, if I'm right, or even the 200, it could go down as low as 55K, which I just don't think is. I don't think that's realistic. But I'm also not I'm not a technical analyst, and I wouldn't know better. What do you think is a realistic low?
Well, I mean, at this point, you're probably going to see a lot of extremely low valuations for Bitcoin. I did another show earlier this morning, and someone was actually saying Bitcoin might go to 35K. Well, technically, there's a non-zero chance that is going to happen, for sure. But if you look at all the indicators, the MACD, the RSI, the fear and greed, the gap between the MA and the current price, it is all more extreme on the day than the COVID bottom and the Luna bottom. So, yes, we could say it could go lower, but based on that fact, Bitcoin is at 85K, hitting bear market low valuations for all those indicators. So that itself could technically say that we might be getting a few more hits, but the chances of that after this liquidation earlier this morning have decreased significantly. And it's also funny, perhaps you just need to look at the poly market bet on the Fed decision for December that has shot up today, and Bitcoin is bouncing back up. So perhaps that's the only chart to watch.
Thank you so much for coming on, Michael. It was a great show. It's a difficult show, everyone's panicking, but these are the times where you have to be calm and go through the charts and go through the data and really analyze it. So, thank you so much for coming on. We do really appreciate it.